family are the only ones that can really ever start this thing on time. But welcome back, man. How you been?
Good. It's been, a good week. Actually refinanced two properties. I guess would have been last Tuesday and locked in rates on my two new constructions yesterday.
Very cool. Also, I know you had a event. Joel, who will be on tomorrow, Lending for Entrepreneurs, and Cody Evers from the school community will be joining us tomorrow. But Joel put together an event in somewhat Brannon's area, but in Texas. But how was that, man? What was that all about?
It was good. So he wanted to do an interview just talking about my business model. And it was over in Dallas. For me, it's about a, I don't know, hour 15 drive over there. So it was a pretty neat venue. And he interviewed me and a couple of other people that I guess those will be coming out on his channel here soon. So it
He
was just a
interviewed
good day.
he interviewed a few Brannon Potts, looks like, from what he tagged on social media, but that's an inside joke. But but yeah, like I said, I love these Tuesday talks with you. You always bring up a great discussion and topic, and I think today you want to talk about your business a little bit.
Yeah, I wanted to share. I know many of y'all know I've got another business and kind of talk about how it all started and what I was thinking. When I got it started, I knew I was going to have to leverage capital, but then also leverage people, my network, all of that. And what I was looking at was how can I get this business going. And at first, it started out, I was definitely more active in it. And then over time, it is becoming passive as I've worked out a lot of the tweaks. I've created the efficiencies. And as it's grown, my bottom line, my net has grown using leverage actually multiple ways and holding all the expenses accountable. It has got increasingly profitable in this other business. And I know, it takes a little bit of time, but as me as a business owner, I understood that it was going to start out with small numbers. I was learning a lot of the pieces of it, and over time I was able to optimize that business, and now it's become increasingly profitable.
So you're talking about your management company, and like how long has this been in operation?
Yeah, I am talking about the management company, but I'm talking about my real estate company. I'm talking about owning the properties. It's both.
Oh, not your agent or brokerage like real estate side. You're talking about your rental portfolio.
I'm talking about my rental portfolio. They both operate very similarly. There are a few components that are different, but and some of the language of the different things are different. Like my customer with property management is actually both the landlord and the tenant, but my customer with our rentals is the tenant. That is our customer. And how do I
So
grow
you
revenues?
so
Go ahead.
you're kind of going back to the but agreeing with the bald guy a little bit from
Well, what
Pineda
I
and
would say is, yes, he's agreeing with me because I've been saying this for a while. This is not something new. I'm just glad he decided to agree with me.
you did a recent interview with Zuber that just came out yesterday, I believe. Is that kind of what the focus was on for that topic?
It was, and getting him, and I think you, Mark, and a lot of the audience, especially in the one rental at a time community, to understand, and maybe you have some fears or negative thoughts that you are an entrepreneur, but I'd say you're an investor entrepreneur, and then maybe you call it a little e entrepreneur. It's smaller numbers. If you're doing it one rental at a time, it's starting with smaller numbers, but you're beginning to understand how to run it. And as you add more doors, that little business becomes a bigger business. And how do you increase profitability? There's multiple ways be it through the expenses on the NOI side, which is a feature of when you're doing NOI, you're comparing the asset purchase, which is a balance sheet item, with the upfront operations of your asset. But you're looking at, so it's a profit and loss discussion with tied into the asset. You're measuring the productivity of the asset that you have that's producing revenue for you. I'm trying to use language to get for you to understand. We tend to think of it, and a lot of people think of it as I own property, but try to think of it running it as an operator, which in the video yesterday, I had him say, what did he call it? You're of the what? Well, that is a business discussion. And really, every year is the year of the operator. If you're running it well, you're running a good business. What's your thoughts,
I
Mark?
think we have a new name for you though, real quick. Yasik is saying, "Hello, everyone. Nice to see the Bitcoin entrepreneur expert in the house." So,
Yeah, I bet. No, I like
um,
my money and having it stable.
no, I think we may have touched on it a little bit last week. I think I agree with you on you know majority of it. I think the only thing though is for a lot of people maybe it's this whole accidental landlord thing. So a lot of people, that is why they probably don't look at it as an operator
I think
from the
that
beginning.
group,
Yeah.
I agree with you. But I think in our group, who we're teaching to, these are people that are becoming intentional. And if you're becoming intentional, you want to be running it like an operator. Start running it like a business. If you don't run it as a professional operator, it's going to fail. All of us that begin taking it that serious and owning it in that way and start owning all the aspects of it become increasingly successful. And I think that is the group that is a general rule. That is the group that reached the financial freedom through real estate is they become a much stronger operator. And I think what I'm going to do, and I was sharing this with my wife, I said, and this comes from a marketing background. I don't know if I ever shared much of this. So our family owned agency business, and that was what I was around. All my uncles, my dad, my grandfather owned this big ad agency business. And what you used to see is how much share of voice do you have, and talking about your message is the voice. And I was saying to her Sunday morning as we were heading to church, I said, I think I've found my voice. And she just didn't know what I was talking about. I was like, what are you talking about? You found your voice. And I think my voice is going to be not only through teaching financial literacy, but teaching how to become a more professional operator and understanding how the different numbers relate to each other and how to then interpret those numbers. And I think that's the skill sets I've always had. And I'm going to use my channel to talk more and more of things that you look at and what some of those numbers mean and how to interpret them. And I know you mentioned that. I want to teach everybody to become a unicorn of understanding their financials and how to make them better and how to improve it.
I want to go on record saying that I do not recall calling Brannon a unicorn. He mentioned that on Zuber's video.
I remember it. I remember it.
Maybe I called you a fluffy unicorn, but
There
I
you
don't. Hey, Cody's here. Good morning, Cody. Cody and I kind of touched on this topic a little bit yesterday on our live stream. He did bring up the business side of things, but if anyone also, hopefully you noticed on the thumbnail, there it's a little e for entrepreneur. So
Yes.
that's kind of what Brandon was talking about, the little e side of things. I guess maybe I want to start to let's say, like you said, so if someone has no properties yet on their first acquisition or first transaction that they do get, or do you think thinking of it as a business though is sometimes what holds people back a little bit from getting that first property because they're trying to look at too many avenues or numbers from the business side of things in a sense.
Yes, I do think there are people that, and I think there's a personality trait. Some people get into that analysis paralysis, and they're just constantly thinking the numbers, and they can't see both the big picture, the small picture at the same time, and be able to overcome. I think it's a fear of making a mistake, and so you want to get right. For me, I'm going to give a percentage. I'm just trying to describe something, is getting 95% of it right. Let's just say it's 90. I'm going to get 90% of it right. I don't know the other 10% till I'm in it. But I look at it, for me, is okay. There's when I first, even when my first one, it was, that fourplex. I didn't know all the ins and outs like I know it today. But I said, okay, I think I've got 90% of it right. I'll figure out the other 10%. I've got enough margin for error that I'll figure out the other 10%. And over the years, I was not a professional operator the first year. I think I'm becoming better at it now. I'm only 5 years in. I know so much more. I used to say 30%, but if I'm really honest of what I know now, it's probably 40, 50% more I know now than I did even on my first purchase. And that's okay. It's just overcoming the unknowns to give you margin for error, and then you can learn the other parts and be willing to say, hey, I can make decisions and learn as I go.
That's also why I really enjoy when I see people introduce themselves in the school community and they haven't purchased anything yet, but they're already in the school community taking action. And
Yeah,
I think that's what's super helpful because I think a lot of us, like, when we started our journey, if we just had more resources around us, it definitely would have made the process a lot easier. But that's like to your point, though, I think it is, we're not going to know all the information, but when you're doing it by yourself, that's when
right.
it's definitely a lot harder. So that's why I love when people come to school to introduce themselves and say, I'm doing the work, but I haven't purchased anything yet. And they're just there to soak up all the information.
But I would say also the other side to that, be careful of not having information overload to where it paralyzes you, because you can't make a decision of which direction to go. And I think some people struggle with that too.
Oh, absolutely. So, actually, there was a question from Harrison, and that might relate to a little bit what you just brought up. But it says, good morning from Virginia. Brannon, are you leveraging AI for your property management business? So, we just talked about someone maybe having access to too much
No,
information. No?
I'm not right now. We're not doing AI. It's all with actual boots on the ground. We might do AI for maybe some of the write-ups. I've had some conversations of AI for maintenance coordination, and I just don't feel like it's giving the right decisions and doing it at the same quality as a human being would do for handling different maintenance tickets. Because that's the only thing I've looked at, and I've done some demonstrations on it. I just don't feel like it's there yet, and it might get there, but I don't feel like it's there yet.
What I found interesting when you and Zuber had that discussion on the video was how like, I think I felt the same way. Like, I think he mentioned, the first properties that he bought, almost looked at it, long-term bond investing, I believe is kind of the way he put it, right?
Yes, that's the way you put it.
And then, but he said it wasn't until he went to the Bruce Norris event when he really is like, now I'm a operator type of thing or businessman where I got to start making some decisions, right?
Yeah, and I think that's what I'm trying to help our group, because each of us add different skill sets, and to especially all of us that are very active in the group, we've gotten to know each other. We're all have a little bit different perspective, but collectively we know a whole lot more. And I feel like Matt, Lumberjack Landlord, Me, I come from a business owner mindset day one, and I'm trying to share with the group maybe some things that they can think more like a business owner in certain aspects than they ever would have before by hearing how I see it, how Matt describes how he runs his operations. Those are the big light bulbs going off for certain people that they just don't have that perspective. We're all building into each other, and we're all coming from our own backgrounds.
And then also touch on, you kind of mentioned it on that video, but like someone, if they when they start thinking like a little E or an entrepreneur in a sense, how can you increase your returns in a sense? I believe you touched on, rents are going down. I think you're coming out with a video
It's
also,
a
right? Where
video
rents are
coming out.
coming down.
Yeah, it's one coming out on Thursday. I actually re-recorded that over the weekend. Just felt like I could do a little bit better job, and I was more focused in my conversation. But I've mentioned this actually, I think it was a couple of weeks ago in our live, of how I've had my rents go down and what I was doing to highlight where should I focus on cutting costs. And I was describing it through common sizing, which is a principle that I've taught a couple of times and might teach some more with actually some things Zuber and I are talking about for the next conference, where I'm taking the top line revenue and then breaking down the expenses into its categories at property tax, regular maintenance, long term capex reserves, vacancy reserves, insurance, financing, and breaking it down into percentages to say, hey, how can I work on these? And I was highlighting property management, insurance, financing, and a couple other things that I've been able to optimize all of my operations, reducing some of those expenses. Even when rents were going down a little bit, my net profit per door went up. I look at it not just profit per door, but I look at it as a percentage. When I'm looking at businesses, my property management business that I had, my business, I've owned, I've never shared that. I've owned some snow cone stands. These are all these things in my background. I began to look at what the net bottom line profit was. And if we think of our house, let me go to our house budget, our home budget. When we talk about discretionary income, we're talking about a profitable home budget. When you have discretionary incomes, that means you're not spending everything you have, you're having a net profit on your personal home budget. And that's how you get ahead. Think of it, I'm talking in business language of our personal finances, but think of it the same way the principles work. If we're living at the edge of our means or above our means, if a business is doing that, eventually they go bankrupt, just like our home.
Uh,
Well, Jen,
so
I'm saying he's not. I'm not agreeing with him. He just happened to agree with me. There's a difference.
so Jen Tam is saying, please don't agree with the bald guy. Don't go to the dark side. He's so fixated on the entrepreneur label. It's such a turnoff, and he doesn't listen. Call it whatever you want and buy good deals. She
And
also
I think, Jen, I agree with that. That's why I was going to bring it from my perspective, because I'm not hostile to our community. I'm there to listen and to educate. But truthfully, Mark would know, I've been talking about running it like a business since we've been talking something common. And that's why I say finally that guy agreed with me, but I'm going to do it in a way to help our group and not be hostile.
Jen also says, I feel like being an investor is a lot more achievable and less intimidating versus trying to be a business owner, even if it's the same thing.
It's semantics, and that's really what it is. That's what I'm showing some of the conversations we talk on, be it cash on cash return, profit per door, loan to value. We are talking business items, statements on a business, be it a balance sheet, which a balance sheet is our personal financial statement. Um, Cash on cash return is holding our capital accountable to a return that takes into account the balance sheet and the profit and loss statement. So I'm just trying to frame all of those things so that we understand, some of those conversations, and there is a group that want to get even more professional with it.
Lynn says the bald guy recently said on his podcast he sold 2 alligator Airbnbs and now paper net cash flowing 11K.
Okay.
Yeah.
So,
Well,
way I look at it, and this is where I'm dialing it in for the future. And I always said, what number of doors do I need to get to? So we talk about those on a regular basis. My number is 22, and I'm going to be done. That's where I'm going to finish, and I'm content with that. And I'm 2/3 of the way there now. But I also look at it in the language of business, that I'm saying, okay, I think at 22 doors, I can get above $600,000 in revenue. This is me using my business language. I can get to 600,000 in revenue. I can have my operating expenses over the years be about 32 to 34%, with having enough allocation for reserves, maybe less than 32. And then my financing cost, to where my bottom line, I think in percentages and dollars at the same time. If I want to say I want to get to 180,000 in income tax free, I think both ways. And that's why I'm just bringing both sides of how I think that maybe it'll give some people another thought at it. But I want to get to where I'm at 600,000 in revenue, to where my net is 180,000, which represents 30% net to the bottom line. So it's two ways at it with a discussion that people can think. What I'm bringing to the table is a couple of ways to think of it.
I also really enjoyed when your discussion with Zuber on the video that just came out. I know he's been doing a lot of portfolio reviews recently. I think he said he did about 20.
Yeah.
I think one of his big takeaways was that sometimes it feels like people break off from what they were doing originally too soon or too quickly. So that's kind of what it was. That kind of what he spoke about a little bit.
He did. He said it's become maybe easy for them, and they maybe get bored, and so they break off into a strategy and then cause struggle.
So do you kind of see that also though, maybe from, you're talking about entrepreneur, business mindset, because I feel like that's where some of that comes from, right? So a lot of people, they kind of sell at the peak, start another company, start another business. So I think that's why there's that negative connotation with being an entrepreneur to some extent. So I don't that's kind of, yeah.
And I understand this group probably has more W-2 employees than business owners, and I get that. I understand the audience, and I'm just trying to be a part of this audience. Even though I'm a business owner, I appreciate the W-2 employee, but I'm wanting to bring value of helping people become a more professional operator, and to see some of the aspects of the entrepreneurial side of it, so that they can have a great long-term, I know that some might hate this, but a good long-term business where real estate is the product you're selling. And how
Yeah.
do we make it operate that much better? So I'm
Well,
trying my
yeah.
best to use both sides of the language.
Well, let's stay right there then. So let's say, like you're saying, how to operate better. What kind of other things could you touch on, or when should people maybe start implementing certain things to operate better? Like you're saying, in the beginning, you don't want to be too much information to some extent. So you want kind of the right amount of information. So as you're doing this journey, when is there other things from an entrepreneur side or business side should you maybe be looking at as trying to implement?
I think for me, let me just go through what these first 5 years, and that's all I can really share of knowledge on it. I didn't begin uh, really dialing in, running it more like looking at it from business statements until the last couple of years. So I think some of that was I had multiple properties. And what I do is I put them in a spreadsheet. So let's talk Excel spreadsheet. I thought of this, I would say it's around 2.5 years ago, of putting them in columns. Now I've got over to the left side, I've got all the expenses, property management, you say property taxes, uh, repairs, reserves, insurance, and then below the line, because that's your NOI numbers. And I had all those there highlighted in formula, both in number and in percentage to what I paid for the property. But I did it by columns. Then I did it to the right, a summary of all the numbers. And when I did that, and this is in the last 2.5 years, so I'm not saying I started this from day one like this. It was a progression. Even for me, it was a progression. But I was able to then see where I had more expenses on a certain property because I had it both in hard number and by percentage. And the reason you want to do that it's called common sizing, is it allows you to be able to see it where it stands out. Hey, this property, my insurance is 7%, and this property, my insurance is 5.5%. Why? Is there something I could do to get them? They should be all very similar in percentage. Is there something that I could do to make it more similar? Or is there something I can't do, and that's why it's higher? But I did that with property tax. I did that with insurance. Then I began to even now look at some of the loans I have. Some loans represent a higher percentage of my revenue, and some are lower. Well, guess what? The ones with the higher interest rates, of course, those are going to be a higher percentage. I also have a higher loan to value on that property, so I'm more financed with those. I was wanting to get all of them, each property, so I could look at all of them on one sheet all at the same time. And what I see for the future down the road, not saying I'm going to, if I were to sell one, it would become very clear which one is not as financially good as the others, because they're all in columns. I can see which one stands out that are less profitable than the others. And I can say, okay, this is the one I want to do a 1031 exchange because I found this other property where the numbers are so much better. It makes it a more obvious choice. And so that progression of running it like a more professional operator began about 2.5 years ago. And I'm just sharing what I'm learning.
Yasik says, easy money gets boring, but it's what builds generational wealth. Yeah.
And that's what Michael asked me. So what I have to focus on is I've got my formula of how I'm doing my builds and everything down. So there's not as much excitement because it's not new anymore. So I have to channel my focus and find little small things that are different and new to keep me excited about what I'm doing. So, but I've always been a person that's been very good at staying focused with something. That is, if you want to say a superpower, that is one I've always been more natural at, being it from sports, from academics, from now property management business to now this owning property business. I'm staying with the same model and I'm finding new ways to perfect the formula, if you want to say.
All right, before we move on, people in the chat or that are here watching, maybe you can put in, are you an investor or an entrepreneur in the chat section? But also
Or
want
are
to
you
remind,
both?
oh, are you both? Okay. Um, Also remind everyone, Brannon is streaming on his channel. So if you haven't subscribed, go subscribe over there, and also turn on your notifications so you can be notified when his video on Thursday comes out. Which will be talking about how you increased your
How I
rents, or
increased,
not your rents, but
how I increased my profit per door with rents going down.
so Lynn, who's not asking for a friend, I know she's asking for herself, but she says, what do you guys do in between deals besides optimizing the portfolio?
Oh man, I do get bored. I'm finishing up two builds right now, and I won't start any the next two till November. For me, it's I needed some downtime through the summer and also to refresh my brain a little bit because there's a lot of moving parts in a build. So I need, personally the downtime, but you and I both are still in the growth mode. So I'm focusing on the next purchases or for me the next builds, getting them prepped and ready, and still looking at new dirt for future builds. So that's what I'm doing. But it's giving me a little time of downtime. It's somewhat tiring. That's the best description mentally, because when I get off here on this video, I've got to do a next draw for the two builds, and I'm trying to reconcile the numbers. I'm trying to make sure, okay, I've got this much of the draw left. Here's where I'm at in the budget. Am I under my draw budget? Am I over it? There's a lot of moving part numbers, and building two at a time. I mean, there's just lots of moving parts, so you get tired a little bit.
Um, you're looking at what I do in between deals. This is what I do. I live stream every day. No, but I I
You're not
don't like
Scrooge McDuck counting your money, your
like
stacks of
like I
money?
like I told people, I don't like real estate. I don't I mean, I like it, but I don't like it like some of you folks
I
that talk about
do.
it.
I love it.
Well, yeah. I just love this kind of stuff, like bantering, and that's definitely. I think this fills my void of not being at the firehouse currently, and hopefully not going to be there much longer. But this type of stuff is what fills that void, right? The firehouse is definitely a place of banter and relationships and family, and this is kind of filling that. So this is what I do. But to that point, I did close on a deal yesterday, and Emily, who's my guest on Fridays, she posted on my reel that she's like what, like she goes, I thought you were done buying stuff, and I said I don't just live stream. I mean, I'll still buy stuff every now and then, but I mean it definitely has to make sense, and sometimes I'm buying things too more so to not satisfy, but I mean, I think I'm buying things to keep that relationship going with the people in Pittsburgh that we work with. So as long as the deal is good enough, and maybe nobody has bought anything, I guess, recently in a sense from so if it's good enough, I'll probably try make it work or something. But Chris Webb does say create a sheet with optimal, above average, average, below average, and poor. Assign probabilities, and this is expected return. Did the actual hit the expected return?
Yes, I do. I do some of that. I have a separate sheet for that. I heard something. I don't know if you saw it, Mark. It goes along that lines. So I do break even analysis also. So I have a column for break even analysis and seeing where that is as a percentage of average rents. Ken McElroy and George Gammon were doing a video that I saw last week. It was about an hour long video, and I was driving over to the builds listening to it. About halfway through the video, so unless you stayed with it, well, Ken McElroy started spilling analytics gold to the point where I pulled off the road and started writing down what he was saying because it was things not many people I've never heard said. And he was talking about his break even analysis because I want to look at people that are, I want to be best practice is the term that I use. I want to run my business, either business, my real estate portfolio or my property management. I'm looking at best practices, and I'm looking at best practices as a percentage of revenues and expenses. And he ran break even analysis. Way he does it, his break even analysis is between 70 and 60%. So if rents were to go down using what he said to 60%, he would still be break even on all his expenses, including his financing. And I thought, I've not heard anybody talk about that. And so of course I'm writing down some notes from that video halfway through because he spit out a whole bunch of things. And so I changed up my calculation to give it at what percentage of average rents after all expenses. And come to find out, my portfolio and way I underwrite it runs around between 73 and 75% is break even. Well, that's stress testing your purchases. It's saying, okay, what can rents do, and I'm still covering all the expenses. Because we see now, and he was talking about syndications. These syndications were failing because of their projections, and their models were not realistic. They didn't stress test any of it, be it interest rate risk, loan to value, rents, expenses. And I've seen it when I was in banking, and I've seen it just recently with an investor here locally who lost 11 properties because he did not underwrite it well. And I want to not lose my properties, but also my videos of what I teach. I want to make sure I teach it the way I believe, in more of a relatively conservative, but also deploying leverage, not like Dave Ramsey of Debt Free, but deploying leverage. I'm trying to be a balance in between, not high leverage, not super low or no leverage, somewhere optimized to optimize the return, but also not put the property at risk.
Yasik follows up with, I think anyone owning a rental property is a little of both. Harrison Trade Better follows us as, I'm an investor, but I know I need to eventually be an entrepreneur. So here's a great question for you. So some people want real estate because they don't want to run a business. What would you say to them?
I would say, as we've all started, when we initially buy our initial properties, any initial property, it is more active at the beginning. And as you get it dialed in, stabilized, and optimized, it becomes increasingly passive. And that actually goes for any business owner too. Great business owners, they've optimized it, it becomes increasingly passive. If the business does not function unless you're there, you don't own a business, you own a job. If your property does not function unless you are in it all day, every day, you've just bought another job. You want to optimize it to where it becomes increasingly passive. So I still say it is a small entrepreneur business. As you dial it in, you can make it increasingly passive, which is what we all want. But it will never, never be 100% passive. I stand by that. You might still be putting, let's just say 10, 15% effort in it versus when you first got it. Will never be 100%. You will have to actively at least oversee making sure it's running right.
Yeah, I think that's a great point also. We can, so how you're saying it would never be 100% passive. And I guess you also have to think of what is the ultimate goal. So like, is the goal to be less involved over time or always operate at a high level?
My goal is to less involved, and it could be my kids get involved, and I'm teaching them. That might be a way I teach them how to run the properties, because eventually they're going to be getting the properties where they're making a little bit managing it. But it could be going along the line on has done. So he's still handling everything. He's systematized his operation to where it's become increasingly less and less hours, but they've all get the same experience. And this is something I will talk about. If we look at a good franchise company, why do people buy franchises? They buy them because they're buying the playbook. And if they follow the playbook, they will have a good business. But following those systems creates a very common experience for everyone. And if you're doing it the same way, down the road, something changes, you know what you need to change. If you do it the same way every time and create a system, even with owning multiple properties, you can, when there's problems, you'll be able to find out where that problem is so much faster because you do it the same way. If you do it different every time, it's got much longer and you're not going to know why that problem is happening. That's the same with franchises in any good business. You stay with an operating procedure that's done the same way every time so that the customer, our tenant, gets experience, and it's a consistent experience. And we optimize it. We know how to optimize it. If you're doing it the same way, you know how to tweak it. I know Dion, I guarantee you, he's tweaked his systems over the years to where it's if you want to call it more perfected. It will always be tweaked periodically over time because just things change. But that's any business, and that's what I'm hoping for as I have it dialed in. For me, I wanted to own the company that manages my assets. That's that. Remember me teaching that level five levels of leadership? That is the fifth level. Own the company that manages your own assets.
Casey, thanks for tuning in. He says, I agree 100% with Brannon. And then Nicole says, entrepreneur, this is definitely a business.
The beauty of this one, and I think what is some unique of this business, in a lot of businesses, you're making money one or two ways. In this business, you make money multiple ways, from principal pay down, from appreciation, from the gross revenues from your tenants. Unique to this business is you make money, I say 5 different ways because you can do it through forced equity also.
Harrison is asking, Brandon, did you ever think of owning business franchises near your properties?
I haven't. I've start them from the ground up myself. I think I could function well in a franchise type of business. I just have never looked at it, and the
Open
property
bookies.
Bucky's there. The property management business will be my last business. I'm probably not going to start up another one other than my daughter, which some of y'all met, Bailey. She wants me to open up one down near our short-term rental and open up a short-term rental property management company. She's talked to me about that.
Are you going to let
That would be the
her
only
run with that, you think?
that would be the only way I might start a new business is I'm doing it for my kids. Because there's some features of short-term rental that are similar, but there's lots of features. It's a different type of business. I'm doing long-term property management, mid-term property management, slightly different, and short-term property management is totally different. Commercial's different. So I'm sticking with residential long-term. I know a little of short-term, but not everything. That'd be the only way I'd start up another business.
So I think, like I said, with kind of the main focus, like I said, if everyone noticed on the thumbnail, it had a little E for entrepreneur, right? So what would be, I guess, that next step to become a big E entrepreneur, from the little E to a big E entrepreneur?
To me, the way I was describing the E is probably your first couple of properties. It's smaller numbers, and you're starting to learn how they all work together and a relationship with each other. As you get into more properties, it becomes a bigger business. That's just what I was trying to get a lot of this audience to see they are small. They are the beginnings of an entrepreneurial business, and that it grows over time as you allow it to grow.
All right. I think yeah, so we'll say you what the bald guy is agreeing with you, right? Is that the
But his
which
problem
bald
is he has he doesn't realize he has two ears and one mouth.
hmm, I think you said that the last time. Yeah.
That is his problem. He doesn't listen. And there's times I don't either, but I want to stay in a learning mode and have learned from a lot. Even I've Cody, I know you might be listening. I've called you, even though I was a CFO of a family business. You taught me a couple of things on some financial things that I should have known myself, but I'm willing to learn. Even from somebody 30 years younger than me, I learned from Cody. And I want to stay in that receiving mode.
Yeah, I think that's one thing hopefully everyone takes away. It's never don't stop learning, right? There's always something to learn, and no matter age difference and anything, right? Someone could be started, even people starting, I feel like some of them are way ahead of, where we all started, right? As far as their knowledge, and there's so much information out there, and we're always picking up different things. And yeah, don't ever stop learning, but also don't take too much information, like you were saying, right? I mean, sometimes it can hinder you a little bit.
Yes.
Hey, aloha. I think that's Janitor on Fire, I believe. He has like four different channels, so it's always hard to figure out which one he's coming from. Yeah. Yeah. So, anything else you want to talk about on this topic,
I
or?
think we're exploring it, and just be ready for more videos. I know I'm starting the series on the builds. We'll start the end of the month, and I think what I'm going to do for right now, because I'm getting into graduation season and summer season, I've been building out my that are videos that are coming. But once a month, I'm going to do a video on one aspect of, I call it lore, the language of real estate. I'm going to use the language of real estate that we all talk, but then dive into what it really means on a financial statement. And so I'm going to do one video a month on that for the coming months.
I better not. I'm gonna. So Harrison says, Brandon, who have you seen as business sports icon you modeled yourself after? I will leave my comment to myself on this one.
Oh, I'm trying to think on the business side. I learned a lot. It was more some business books. Robert Kiyosaki's book, The Cash Flow Quadrant, was a big one for me as a business owner, but also as an investor. Sports icons.
Look at the private chat. I told you.
I don't
Oh,
private.
you can't see it.
Oh, oh um, from tennis, my biggest ones were tennis. I don't know if some of y'all remember. This is from the '80s. Michael Chang was a tennis player. And back then, he played tennis a lot like I did, but he was a hardworking grinder and had some great success. Won the French Open. That was one. Andre Agassi was one. Um, I used to love to watch the Ironman triathlon, and that's where I got a lot of my inspiration. The business books, Maxwell's business books. Trying to think here. There's stuff by, trying to think, that basketball coach. I just went blank. The UCLA basketball coach has got a lot of good stuff out. But John Maxwell, I
John
got to
Wooden.
spend some. John Wooden, yeah, that's what I was trying to get. John Maxwell, I've spent time with. My dad was a speaker with Promise Keepers back in the years, and so I got to spend a lot of time with John Maxwell and some of these uh, Larry Burkett and some of these great men that I got to be around because of my father. I know, but not that.
I messaged some people what I messaged you. uh, I don't know. Do you follow basketball? Do you watch basketball, or have you watched basketball?
No.
No, not
See,
really. Oh, okay.
my dad college basketball, and basketball fan, it just wasn't my thing.
Oh, okay. No. Because the last recording I did with Zuber, that was one of the kind of topics that came up of kind of relating, um, like
I mean, I know it.
himself.
I know a little bit. I don't watching college this year. That wasn't what I'm not as familiar with college basketball this year.
Oh, not no. It was more like who would you compare your style to? So like he referred to like Lumberjack as kind of like who did he say? Oh,
Oh,
Patrick Ewing or Charles Oakley,
I saw that.
because
Yes,
he
I
was
saw
he
what he
was
said.
kind of that he was that guy that doing the work and he compared Dion to like Larry Bird, kind of that crafty. He's talking trash to you, but you don't know he's talking trash to you, kind of thing. So,
Yes, yeah.
uh,
I'm seeing some of his comments. Oh my gosh. You know,
Brannon and the Bald Guy LLC Property Management and Flipping. I'll hire you, but just you, Brannon.
you know, Mark, you'll think this. I am actually the shortest in my family. I'm 6 foot, and I'm the shortest.
Yeah, me too, man.
Even among some of my girl cousins. My girl cousins are taller than me. My brother's 6'4". My dad was 6'4" for college basketball. All my guy cousins are all taller than me. That they were all tall athletes.
After seeing Steven's comment, I have a new business idea. We're gonna have a we're gonna no, we're gonna have a business of helping people how to use Zoom, or being in the Zoom calls and being able to share screens and everything. Because Steven, if you've seen Steven try to share screens on the accountability calls, man, it's painful, man, watching this guy. It's funny. He's getting better though. He's definitely getting better. So that's the same thing, right? It's getting out of your comfort zone, and it is probably something that he didn't have to do a lot before, but now, that's just what it is, right? It just, this whole community, we can joke about it, but he's on the calls now, and he's sharing his screen and sharing properties he's looking at. And what what is Yasik? What do you mean? No, wait, what are you talking about? Yeah, I don't know, man. I got nothing else today. Let me see. Is there any? Uh, hmm. Yeah, nothing much, man. Anything else you else to wrap it up with?
I think that's it for today.
How's your book? Have you started your book then?
No,
No.
man, I'm so busy right now. When I get into, let's just call it full retirement, that probably will be something that I can focus on and make an impact. But right now with kids, I mean, we've got, just like you, we've got sports. My son's doing baseball this spring. My daughter's about to graduate high school. And then the bills, that's and the business, the property management company, that's enough that I can do right now. That's enough on my plate.
Yeah, see, so Steven is retired FDNY, but I always joke that he's NYPD when he's on his tech skills. uh Brandon, any bite? Oh, I think Harrison's referring to that property you talked about a few weeks ago that you'd be willing to sell. He said, any
Yeah,
bites on the property?
I don't have it. Just so y'all know, I was going to do. It's kind of like a turnkey property. That's the best description I could call it. Is I would, if I have somebody that says I absolutely want it, I'm going to do it. Um, Being where I build it, have it ready, get the first renter in there, and hand it to you. So it's really kind of a turnkey property kind of product. Is the best descriptor to what I was wanting to do for someone.
I
But
think, yeah, so he's the partnership with an ORAP member. I mean, I think that's the same thing he's referring to.
yeah, it
But you
would.
didn't, because you weren't looking for like a partner. That's why
I
you're
don't need
looking
a
almost to sell
partner.
it.
I'm
Yeah.
just going to build one extra house as a turnkey property for someone. And for me thinking, well, if some reason nobody wanted it, I will still keep it and just keep it for myself. But if somebody wanted me to build them a turnkey property, I would do it.
All right. I believe there's an accountability call for unicorn agents in the school community today. I forget what time that one comes on. Dion also goes live 4 p.m. Pacific today. I'll be back tomorrow, 11 a.m. Eastern, with Joel, Lauren, and like I said, school member Cody Evers will be on. He's in Wisconsin. He wants to talk about, and maybe you can answer this a little bit real quick before. He wants to talk about mini retirements or not, or retiring more than once. So
Hmm.
he kind of believes, kind of that Coach Carson where, um, you know, you have to take these small retirements sometimes to
Yeah.
almost see the journey and or enjoy and
The only thing
um,
I've done is taken, I wouldn't call it a retirement, taken a month off at a time. I don't know what if you call that, how many that is, but that's a mini little pause. Um,
yeah.
for me, and I know I've shared this before, I'm only putting in 15 hours a week in these
Shh,
businesses.
your wife might hear you.
I know I'm saying it soft so she doesn't hear it.
So yeah, so like I said, Joel had an event this weekend. Brandon took part of it. When he did an interview with you, right? Or
He
no, he
did an
just spoke.
interview. I don't know exactly when that's coming out. He didn't know the specifics, but it's going to be here soon. My video comes out Thursday at 4:30 Central. My discussion of the rents and growing revenues or growing profit.
And then if you haven't yet, like I said, go subscribe to Brandon's channel, turn on your
Yeah, I want
notifications
to
so
just
you
have
can.
more subscribers. I don't have the watch hours like you do, but at least I have more subscribers.
What are you at now, man? I'm catching up to you, I think. What do
Are
you and
you?
Cody? I can't catch. No, I'm not catching it. You guys. Um, you know what the problem? Not problem. Now I'm gonna be complaining about something. I don't like that the live videos don't. I don't think I can make it at the top of my page. It's
Yeah.
like hidden. Like you cannot
You have to go to
unless.
the live tab.
Yeah. So there's no way to, because that's where all my recent stuff is. So if you go to my page or my channel, that's not the stuff that shows up on the top. It's so I don't know. There's no
Yeah.
way around it. Oh, there's one more. Hey, Curtis is tuning in. Curtis, dude, man, he's doing a lot of networking in his area, so that's cool to see. But he's asking, how do you shift your mind from W-2 to entrepreneur?
I think, well, where I did is began creating reports in a financial perspective on my properties. I think that's where the shift happens. And even in those reports, maybe the first time you compile it, it might not be perfect. But as you look at it over time and manage those reports on a monthly or annual basis, you'll make some changes to it. And I think that is where that shift happens, is beginning to look at reports in a financial perspective.
Yeah, I think the big thing though is that the sooner you can shift that mindset or make slight changes and you start, like you're saying, looking at reports or
Looking at
it's
the
a lot
financials some
easier
way. Yeah.
and just a lot better for the long run. Because you know, if you start and that's also partly, you know, me acquiring so much properties in the beginning was kind of a pain because now it's like I have nothing really set up for that, right? And now
Curtis.
it's like I'm going back to try and
Yeah. And
figure
that's
these things out, right?
what I did is, as I created these reports about 2.5 years ago, I went backwards and began doing those reports. I went all the way back to 2022. And so I have a tab for every year to see the progress, not only in number of units, but in the revenue and all the financials. And then I'm going to be able to tell a story for future videos is, hey, here's where I started. And I was going to do a video this year too of my 5-year mark of where I started and where I am today, because I think people enjoy those. I know Millennial Mike does some of where he bought the property and where he is today with that property are always very insightful. I will eventually do one with a share screen where I can show my common sizing financials so that people can see it. I know some people are very visual and see what it looks like. that helps them too.
Um, Lynn's asking if I do financial reports. Probably not to the extent of a lot of you. Mine is more through, so like I use Baseline as like a landlord banking platform, and it's kind of like a bookkeeping also. So every you can print out your own reports there, and then you can also it also does like almost like a property tracking, right? So you enter the property, the address, the purchase price. I think it has the mortgage rate on it, your equity, keeps track. So it keeps track of all those things. And then so when you do the reports, it breaks down kind of based on what you've been inputting the your information, right? Yeah, that's all I got, man.
All
Like I
right.
said, I know you're busy. Thanks for always doing this, man. Like I said, you're the only one of the few that can always count on showing up ahead of time. Like I said, that's why I started ahead today, about a minute early. So no one could complain today. But thanks. It's always fun catching up with you. I will see you next week. And everyone, see you tomorrow, 11 a.m. Eastern. And have a good rest of the day, everyone.